Welcome at video 9, Intrinsic and Extrinsic Value. Wow, it's such a lot of words and it's so much to understand. But in a way it's not so difficult. Now, you remember that you could be out of the money and in the money. Out of the money, then it still has to reach the stock price. And in the money, it has already surpassed the stock price. Think about it. If you buy, the stock price is between 112 and 113 and you would buy it for 115. As you remember, whatever you buy for the strike price stays. That value stays as long as the contract hasn't expired. So if you buy it at 115, whoever wants to buy it from you has got to pay 115. And the value of the stock price is between 112 and 113. So you basically have an instant value, an instant profit of around $3. That is called intrinsic value. So you only have intrinsic value when you are in the money. So what do you have at the money? Well, not much. You've got a little bit. You've got, because it's still worth something, as you can see when you bid or sell. You have a little bit, but you don't have as much, and that's same as out of the money. I don't have intrinsic value, but I do have 48 cents of extrinsic value. At a put or a call, it doesn't matter. In the money has got intrinsic value, because the time value also decreases as the option gets deeper in the money. So the intrinsic value also increases because it gets more. Now out of the money doesn't have any intrinsic value, neither has the at the money, but they do have extrinsic value. So at the moment, just suppose you would buy out of the money and it goes in the money. When you start out of the money, you only have extrinsic value, but when the option moves in the money, you suddenly also have some intrinsic value. So you only have intrinsic value in the money. We will go over this more later again because you will see it in live trading. Hope it helps, and I'll see you at the next video.